Alrighty. Hello, everybody. Welcome to the Quant Data Q&A Market Prep. It's Wednesday edition, right? We run these every Wednesdays and Sundays, 5 p.m. PST for you guys over there. So you guys can ask questions, right? You guys can learn a little bit and hang out and be prepared for the market. Today was a special day. We had FOMC. Bit of an interesting one. We pretty much ended flat on the day for FOMC. I thought that there'd be a little bit more. There'd be an actual direction called for the market. We actually just did a whole lot of whipsawing. IV today was so interesting. We got up to a high of 72% on individual time series for 0 DTEs for IV, which is crazy. Because normally I don't feel like it's gone that high. Even the last FOMC, I definitely don't remember it getting that high. It went so high just for it to do nothing, right? Because where did SPX open at today? SPX opened around 6609. We closed at 6600, so basically whole lot of nothing. Right now we know that for those guys that participated on stream today, you guys know I ended red, right? I waited all day just to make one trade, and that one trade definitely took me out. But that's okay. I think the more we kind of dig into what happened today, the more we can look further down the line and see what may be coming down the line. Because I have some predictions. I have some predictions here. Could be wrong, of course, but the prediction nonetheless. First of all, I want to go over what was discussed today. So we had a rate cut. Right, 0.25. Not too bad, right? It's something that everyone expected. Now, I've been saying that it's probably already priced in, which is why I think that when he announced the 0.25, that nothing really happened, right? We still ended the day red, $8 from open, $8 below open price. But there's a couple things that I think is going to be really important. So what was the main thing that they said for the reason for the cut? Now, Powell did say, jobs are still a little bit dicey, right? The mood of the cut was a risk management cut, right? Now, some of you guys are thinking that is he just doing this to bend the knee to what Trump wants, right? Trump has been saying that he's too late. Powell is just doing everything late. He shouldn't be chair. We don't really know that. But the outlook of the market right now, based on his talks, I think it's a little bit of indecision. Based on everywhere around, I don't know if it's dovish. I can't really say that it's hawkish, but we know that there could be some more cuts down the line. So this is an article that I'm going to share with you guys in the chat. But yeah, this was something that a lot of people paid a lot of attention to, like the fact that it's a risk management cut and not for anything else, and the jobs are still pretty bad. So what are we looking for in the future, right? I kind of want to pinpoint a couple things. So today, obviously FOMC was pretty important. We had a lot of puts fly on today, right? This kind of gave us an idea that we might get a steep cut down during the session, right? Nothing happened all day, all the way until 11. That was when we had the big spike up. This kind of called the top for us. Interestingly enough, when the market spiked up, do you guys see this portion right here? Right here. So I'm going to maximize this screen. Like right here. What actually happens as the market climbs up? So this gray line is price. Red line is puts. It's filtered for 0 DTEs out of the money, so purely directional puts. And then same thing for calls. We kind of saw this ramp up where calls broke above the 0 line. And a lot of us in chat were like, okay, markets, like we're okay. Markets are actually going to survive this. But even as price was going up, a lot of 0 DTE puts continued to pile in. And at some point, I know that we got to a pretty high divergence, like right around here, right? It was like over 3 million. Yeah, 3.6 million in net premium difference. So this is $3.6 million more versus of puts versus calls. Eventually, calls continued to die down again, and we got to this level here, 65.50. I'm going to show you why on a FOMC day, Greeks are normally not going to help you too much, but they will help you kind of determine enough about where you want to at least take on risk and sell. So where did we go? How low did we go? We got to a low of 65.50. That was right at 11.50. So let's zoom this out to 11.50. $11.50 right there. Now we were all eyeballing that pesky 6,500, right? That was a little bit scary. We know that when IV is above 30% on 0 DTEs, Vanna is the one that kind of takes over. And even Vanna was pointing to that. So this kind of gave us a little bit of a scare that the market was still going to come back down towards the 6,500. But look at that interesting shift from 11.56. So 11.56 is literally right on the dot of that pivot. 6,500 actually stopped becoming the MVC for Vanna. Now, FOMC aside, trading this kind of price action is not ideal. It's definitely very tough, which is why I took a loss as well today. What we should normally do on an FOMC day is size light, which I didn't do. Manage our own expectations, right? I know that we actually had some value when the price was coming down to sell below 6,500. I don't know why I didn't take on that risk. I think it's something that I think it was just a little bit psyched out already, being bummed out from losing already, because at this point I already sold my or I already bought my put credit swords back. In a normal day though, we would be looking to sell beyond this, like beyond any point that we have that's the most elevated, expecting price to stop, right? So 32 million, I know it's usually in the hundreds of millions that we normally deal with. FOMC just not having that today. But today, in the end, ended flat. So what are we looking for now? Now, there's a couple things that I found that I think is going to be really interesting. So I'm going to zoom us out to this OPEX. So September 19. What do we think we see? Now, there's a couple orders that I wanted to show you. So we saw, let me refresh this really quick. Today, puts dominated, right? Take a look now at September 19. What are we seeing for 0 DTEs? It's a little bit even, but there is clearly one premium that's a little bit further. It's getting us a little bit further than the other one, right? So calls are above by just $1 million, just shy of $1 million here. So it looks like there's still one last hurrah, and I think there's a chance of us getting to 66.50 by this Friday, and then I think that's going to be our top. Why do I think that? I'm going to show you this max pain right now. Sorry, not max pain, net flow. So I want to show you guys what I discovered a little bit. So I'm going to turn this back. So what do we see here? And I'm going to pair it with delta and gamma as well. So what do we see here? This is FOMC. There's no expiration date on this filter. It is filtered for buys only, out of the money, so purely directional calls and puts. There was one order today that accumulated to $206 million. What strike do you guys think this one goes for? This one is targeting 66.50. So let's open it up. So before the event, we had a big order, 143 million, and then an unusual order, 14 and 1.4. Now, it's all targeting 66.50. You guys see that right there? 66.50, 66.50, 66.50. Now, these ones are for December, but this one's for September 19. I'm wondering if this is going to be our last hurrah. there's a couple things that have changed since today's close. So today's close, we had this. So a lot of things are changing. So this is exposure per expiration. Now I base my longer term positions, my longer term swings based on cumulative delta. No, sorry, not cumulative delta. The net delta exposure in a cumulative look. Now this is the tool that we use to do that. This is net delta exposure by expiration. You can see, so I'm going to show you actually before. Let's go back to like September 2nd. Okay. I'm going to go back to September 2nd really quick. Let this load. What do we see? This is September 2nd. So we see that September 19, a hell of a lot of call interest, right? A lot of long deltas telling us that September should still relatively be okay, right? But more importantly, look at December. So this is December, the last OPEX we have for the year. This is the one that we want to pay attention to for our longer term end of year swings, right? What do we see here? 218 billion. 218 billion in long deltas. So end of year, at the start of the month, people were pretty bullish, right? Let's look at it now. Where are we? So it looks like a lot of people have moved their longs closer, because September 19 is now 275. That's a little bit scary. So this is why I'm thinking we might have a short-term top, and it's going to be 66.50. Again, the strikes that they're buying, that $200 million order, that's for 66.50. That's out of the money. 14 million of it was targeted for September 19. And if we start looking here, right? If we start looking here, I'm going to go here. This is September 19, right? So what do we see here? September 19. 66.50 is negative, but we've seen this kind of move before, right? Where there's this one big gamma, one big delta. What are we kind of expecting here? I'm expecting some sort of delta contraction on this day. Now, I know it's OPEX. I could be wrong on it, but it seems like cumulatively, right, we have a lot more longs. If this were an army, this red army would absolutely get crushed. So that's what I'm thinking. There's also some gamma interest for 6,700. I don't think 6,700 is coming this week, right? But I think 66.50 is very possible. Now, again, the view that we just saw earlier didn't look too hot. From September 2nd, beginning of the month, we had a lot more long deltas for December. Those long deltas are now gone. So end of FOMC day, I'm going to zoom this out to, so this is September 19, right? I'll show you September 19, right? We just saw it. Looking for a possible delta contraction at 66.50. And I want to show you now this one here. So I'm going to go all the way now to December 19. And I want to show you the difference. What are we seeing for December 19? Is this a little bit scary? Because this did not look like this at the beginning of the month. What is this dicey position here at 6,000 negative? Right? Are we all seeing the same thing here? So I'm thinking the last hurrah is probably going to be this Friday, and then from then we might have a slow gradual decline, or we might have to look for opportunities where there's like individual strength and some names, like let's say, I don't know, small caps, something like that. Might be looking at like Tesla individually, Nvidia individually for some trades. If we're just focusing on SPX, I think we're in for a little bit of volatility, which is great, which is great for us sell side guys, but it's gonna look a little bit bad for our longer term portfolios. But yeah, that's what I kind of have. And again, I base a lot of my swings on the outlook of what the delta looks like overall, and it seems like September After this OPEX, that's kind of it. There's really nothing left, or a lot less left than what we're normally used to seeing, right? So you can see again, September 19 has all the interest now, and then further down the line, the main one we're looking at is December. It's they basically sold off all of their longs, and now there's some hedging. So we'll see, right? I know some people are still thinking 7,000 SPX end of year. This stuff is dynamic, right? So as the market progresses, as things change, as Trump says more things, right? Something else could be at play. We're not really sure. Yeah, I'm thinking 6650, probably our potential top before the downturn. Yeah, that's it. So we're going to go into a Q&A now. You guys are welcome to ask any questions you may have. I'm going to leave at 6 on the dot, but I'm going to stop the recording for YouTube. So for those of you guys that are tuning in, thank you very much. And yeah, come watch us trade live every day. We're live every day. It's been fantastic. Today, not so hot, but pretty confident. Rest of September, I'll continue to perform the usual way that I perform, right? That's it. So thank you all, YouTube fam. ABJ's out.